Pranjul Bhandari also joining us. Pranjul, what are you anticipating? Everyone is just saying it's largely expected to be an accommodative stance, no real action on rates expected this time.
Right. Thank you. Good morning. So look, I do agree that we won't probably see any big change in action in this particular policy meeting. So we don't expect any rate action. We don't expect them to change their accommodative stance. And we continue to expect them to provide domestic liquidity. So no changes out there. But I still do think that there can be very important takeaways from this meeting, particularly RBI's forecast of growth and inflation. And I say this because a lot of things are changing dynamically over the last 2 months. So let's consider growth. On growth, we are finally seeing some domestic uptick. You know, PMIs came at an 8-year high. Even rural wages have started to tick up sequentially. We have core industries going up, we have railway traffic going up, all of that is looking good. But on the other hand, the global headwinds could become important. For example, all the talk around coronavirus, what kind of a drag it could have on growth in Asia, and to what extent, directly and even indirectly, it could impact India. So what really is RBI's growth forecast going forward is going to be very important. The second thing is on inflation. The current numbers RBI will have to change. I don't think RBI was expecting a 7% plus inflation print, but we got one in December. We are likely to get again another 7% plus print in January. So the changes in its forecast and also its projections. For example, by the middle of 2020, what do they expect will happen to inflation? Will vegetable price fall be enough to bring down inflation at a time when protein-rich items like egg, meat, and fish continue to remain inflationary and don't have much to do with vegetables? What about the telecom tariff pass-through into core prices? So all of these things are things which RBI will have to account for and give us their true estimate of what's going to happen in the next couple of months. And that will dictate the market's expectations of whether there is going to be any future easing, especially in the middle of the year. We, for one, think that space will open up, and we do think that there will be some easing around June this year.
Okay, so around June is what we're looking at. Any commentary you're expecting on GDP, Pranjul?
Well, on growth, again, as I mentioned, that there are two forces. One is the domestic force. There is an uptick that's going on. We are seeing it in the PMI data and everything else. But on the other hand, it'll be important to see what the RBI is thinking about the spread and impact of the coronavirus. So how do they bring the two together? Domestic tailwinds and global headwinds. How do the two come together, and what they really think? Right now, their forecast for growth for FY21 is for at least the first quarter is about 6.1%, and we'll have to see if it's going to change that. Perhaps it won't really change the number, but it'll be interesting to see what incremental commentary they have on the growth numbers.
Okay, so I mean, in terms of when you're saying June, so then for the year, what would be your forecast currently? How much breathing room do you really feel the RBI will have with inflation also creeping back?
Yeah, so look, it's of course, as always, the inflation and growth trade-off. If we find in the middle of June that growth has improved compared to last year, but it's not taking off in a meaningful way, which basically means it's stabilizing at a sort of lowish level, and we find that inflation is coming down, perhaps not all the way down to sub 4%, but still down, not as high as 7.5 where it is right now, then that combination could open up some space for easing. At this point, we see space of about 25 basis points rate cut in June, but this is a very, very dynamic space, and we'll have to keep our eyes open for a lot of things, including, the whole coronavirus spread, and then probably, some little room could come up, but at this point, very, very hard to predict. So we're going with our 25 basis points rate cut in June.
Pranjul, take your point. Just to really sum it up then, and in terms of this policy, I think in recent times, this is the least watched out for policy because of the fact that, it's clear there's very little the RBI can do. But anything else that you'd be watching out for in terms of commentary from the governor, signals. We are keenly eyeing anything that they say in terms of alluding to remaining accommodative, which largely they have to do given the global environment as well. But anything particular that you'll be watching out for?
Mm-hmm. Well, as I said, the commentary around what they think are the pressures on both inflation and growth, what is long-lasting, what is temporary. So, the finer print on inflation and growth is one thing I'll be watching for. The second thing is any commentary they may have on fiscal, whether the fiscal numbers are achievable, or is there any risk, that such asset sales numbers may be a bit too ambitious, and what could the implication of that be? And third, a lot of market participants, for one, will want to see what is going to be the future of Operation Twist. Now, I'm not saying that the RBI will reveal their game plan, quite clearly, but I think some of the questions will be asked to them on what they think, how long do they want to carry on the Operation Twist. So these are some of the other things I'll be looking out for.
Well, thanks for joining us, Pranjul. Watching out for the policy. Not long to go now before we hear what's in store.